Yeah.
Already. Good morning and warm greetings and welcome everyone. I hope you're safe and in good health as you join us for this another exciting FinTech India DigiCon session. And it is my honor to introduce our all-star panel to you today. And I would like to start by introducing our moderator for this session, Ms. 𝗕𝗿𝗂, founder at MaGESpire and partner at 𝗕global, an early-stage angel investment firm. Thank you for joining us, 𝗕𝗿, and welcome to the session. Our next panelist is Mr. 𝗕𝗿𝗂𝗵𝗿. He's the co-founder and CEO at MoneyTap, a company which is also regarded as India's first personal line of credit provider. Thank you for joining us, 𝗕𝗿.
Thanks, Amit.
And with that, our next panelist, Mr. Manish Kumar. He's the co-founder and CEO of kredX, which is India's leading invoice discounting marketplace. Thank you for joining us today, Manish, and welcome to the session.
Thanks, Amit.
And our next panelist of the day is Mr. Nityanand Sharma, the co-founder and CEO at Simpl, one of the leading players in the pay later space in India. Thank you for joining us today, Nitya.
Thanks, Amit. Glad to be here.
Thank you. And with that, our next panelist of the day, Mr. 𝗕𝗹. He is the group president at BharatPe, which is India's leading code-based payment app for offline retailers and businesses. Welcome to the session, 𝗕𝗹, and thank you for being with us today.
Thanks, Amit.
And last but not the least, we have with us Mr. Varun Sridhar, CEO at paytmMoney, India's most simple and transparent investment platform. Thank you for joining us today, Mr. Varun.
Thank you, Amit. Happy to be here.
Thank you. And now to the audience, before we kickstart the session and indulge us in a highly informative and dynamic session, we need you all to fill out a quick poll. This poll that you can see on your screen right now will assist us in streamlining today's session and will also pave the way for future sessions of FinTech India DigiCon Series. Scroll along and select your answers, and when done, click on the submit button. We will share the results as soon as all have completed the poll and submitted. We have received an enormous number of queries from all of you present in the audience, and our panelists will address them during and after the discussion. And in case you want to ask more questions, you can do so using our Q&A function. And you can also choose to upvote a question that has been already asked by someone else that will help us to prioritize. If there are any questions which remain unanswered, they can be posted on our FinTech India DigiCon Series interchange platform, the link to which will be provided towards the end of the session. So just quickly submit your poll, choose the answer which is best suited to your needs and your company, and click on the submit button. Yeah. So here we have the answers to the poll, and 50% of the audience believe that startups are going to be the most disruptive force in the next 5 years in FinTech. 22% of the audience believes that the traditional financial institutions are going to be a force. And 83% of our audience believe that payments is a facility in FinTech, which is being conducted by the FinTech companies, which have the most customers. Moving on to the third question, 56% of the audience believe that ease of use and intuitive product design is one of the important areas to address when it comes to customer retention in the context of FinTech. And 39% of the audience believe that AML and KYC is the regulatory barrier to innovation in FinTech, and 33% believe that e-money and cryptocurrency are going to face some sort of barriers when it comes to regulatories. So 𝗬𝗍, now that we have all these answers to the poll, what is your take on it? And would you like to start the session from there? Over to you, 𝗬𝗍. 𝗬𝗍, I believe you're on mute.
Sorry about that. Yes, thank you, Amit. Namaste and Vanakkam, everyone. My name is 𝗬𝗍 and I'm from Hong Kong. Thank you, Amit and Sing's team for having me today to moderate this distinguished panel on an exciting topic. A quick introduction of myself. I'm a woman with many faces. On the one side, I'm an angel investor doing direct investment into technology startups. And I'm also an active in the VC space as the partner of 𝗕𝗶𝗄𝗵 Ventures Fund. On the other side, I'm also an entrepreneur. I run MaGESpire, which is a technology, venture development, and education group that provides consulting services to companies with respect to business development, market access, network connection, as well as conduct educational talks in fintech, blockchain, family offices, and investment-related topics. You may wonder, why is there a Chinese woman involved in the event focused on India? Well, I have a special connection to India because I'm married to an Indian, and he's from Chennai. And he went to NITT and subsequently to IIMB. We met in Hong Kong, and the rest is history. Today's topic is most relevant and fascinating. India is increasingly celebrated as the leading global innovation hub for financial technology and one of the largest markets that serves more than 1 billion people. This is reflected in the great interest from investors and global enterprises to not only invest, but also collaborate and co-create with Indian fintech innovators. Everything starts with creating a conducive environment, and in that sense, India continues to march forward by setting up a completely digital infrastructure for financial services with the launch of the India Stack Framework. Recent government initiatives such as account aggregation, regulatory sandboxes, and other digitalization drives a step in the right direction and will serve as a boon for fintech to thrive. A lot of comparisons are made to India being in the stage where China was in the early 2000s. The key difference in my view is that China completely misses the early mobile phone era and jumps straight in smartphone era. And this explains why e-commerce app companies are now vying to become the leading fintech companies over there. In 2020, with availability levels increasing and strong growing middle class, conditions are ripe in India for massive scaling of fintech services. Traditionally, every country has gaps in the services offered by banking industry, and usually NBFCs and informal lenders step in to fill in that gap. India is no different. In the B2C space, when there is a large section of the population that works in the informal sector, where the absence of an acceptable income proof prevents financial access to credit and to end customer, has no choice but approach informal money lenders. In the B2B spaces, SMEs usually find it tough to raise adequate credit to scale to their businesses. Given traditionally, Indian companies prefer to borrow from banks, and the Indian capital markets have not grown to full potential and depth. The banking industry doesn't have much bandwidth with the credit needs of retail customers or SMEs. This is one area where fintech could help step in and bridge the gap through alternative credit scoring and other innovative solutions like digital trade finance. Last but not least, COVID-19 has weakened the world over, and the world economy faces headwinds as traditional person-to-person contact business model is broken due to social distancing. This has a knock-on effect on lending space as people's ability to repay gets affected. As the saying goes, the night is darkest before dawn. There will be a temporary spikes in non-performing assets expected, but with innovation and redefinition, this is tremendous. There is tremendous hope for India to rise and shine again. With that, we will proceed to our main course of this session. Let's welcome our first guest speaker today, 𝗏𝗏, the co-founder from MoneyTap. Hi, 𝗏𝗏.
Hi, 𝗬𝗍. How are you?
Thank you for joining this session. So let's have some ice breaking. Can you give us one fun fact about yourself?
Oh, I've traveled to probably more than 85 countries.
Wow.
I speak multiple languages as well. I speak like
Yes, yes, I know.
languages. So
Yeah, quite a lot. If I remember correctly, you know French, you know Spanish, bunch of different languages. That's cool. Okay, thank you. So let's jump to your company. I understand that MoneyTap is the Indian first app-based credit line. So what are the main problems that your company try to address?
sure. So Bobby, when we started this company, just to give a little background. So before starting this company, I was an investor, a company called Prime Ventures. And that itself was started due to my days I spent with Aadhaar, which is India's largest unique ID system on which UPI is built. So I spent 2 years working with Mr. Nandan Nilekani, who started Aadhaar. And at that time, I saw a huge need for credit, right? So the banks only give credit to the top of the pyramid, right? The people who are very prime customers. And the problem is that either the amount of money that the bank would give would be a very big ticket size. They would give, let's say, 5 lakhs, 500,000 rupees, right? But the problem is that in order to, and it didn't make economic sense for them to give, let's say, 10,000 rupees or like 50,000 rupees. It didn't make sense for them. So because the cost of overhead of giving a loan was so high and they make so much money over a 500,000 rupee loan or a 5 lakh rupee loan for 3 years or 5 years. That's kind of how the bank model was. And at my days in Aadhaar, I realized that people want like a sachet, right? India is all about sachetization of finance. So people want 500 rupees, 10,000 rupees, to 50,000 rupees. People want the flexibility. And my co-founders and I, ended up talking to, probably 1,000 people. And it was very clear that people wanted this kind of flexibility in terms of how much money that they wanted to borrow, how long they wanted to borrow for. Some people want to borrow for 2 months. Some people want to borrow for 2 years. Some people borrow for 3 years. So they wanted the flexibility in terms of the duration. And they also wanted flexibility in terms of how they take the money. So they wanted, some people want cash, some people want it on a UPI, some people want on a card, right? So what we did is to try to solve for this. And that's what a credit line is. It's an app. You come, you download the app, you get qualified for whatever you're credit worthy for. We use obviously our own ML algorithms along with CIBIL and banking and the traditional data. And we'll give you a line of credit for either 25,000 rupees or 500,000 rupees. And depending on you, and then you can anytime, day or night, you can come in the middle of the night and say, I want 10,000 rupees or I want 50,000 rupees. You borrow, you can pay it back in whatever tenure you want, 2 months, 2 years. And then when you pay back, you can repay, you borrow money again. So that was the concept. It was initially, obviously, everybody thought it won't work. It was never done before. The risk guys thought it's too risky. The bankers thought it was not economic. Everybody had their own opinion on it. But anyway, 5 years later, since we started the company, obviously the results are out. And most importantly, the most important person is the customer, and they seem to love it. So that's kind of where we are.
Yeah, I bet. If not, I also did a little homework. You already raised over 80 million in 3 rounds, so you're on Series B already. So congratulations. In terms of the product, right? I noticed you have lots of loan packages. Marriage, loan, medical, education, travel, home, used car, mobile, laptop. There are so many different of them. And how did you come up with the idea of having so many different kind of loan packages?
Yeah, so money is the most flexible kind of thing. You can use money for anything. So our initial thing was to evaluate you for like an unsecured credit, where you can use the money for whatever you want. And especially in India, the one thing which stands out about India, and I've run business in over 20 countries, Indians by far want the flexibility. Everything is, I want this and I want a little bit of that, right? It's like a thali meal in India. It's a little bit of everything. So that's what the product is designed for. You could use it for multiple things.
Sure. Well, I can speak from Hong Kong. I'm from Hong Kong, but I got to say, everyone loves flexibility. I think this is the key. So yes, thank you. And so based on this past 5 years of your journey, so, what do you find make it really works in India?
I think to keep your ears on the ground and be very adaptable, because the Indian market changes very fast, and there are a lot of complexities, which I'm sure we're going to talk about, regulation and financial crisis and so on and so forth. You need to be very agile and sort of thread through this. And the models that work in the West, I lived in Silicon Valley for 17 years. I've done startups there. The model there is very different, and you can't apply a Western model in India. That was the biggest lesson I have. The Indian innovation has to be ground up, especially when it comes to a sensitive topic like finance.
I see. Yeah, I guess the culture-wise, a whole lot of it are very different.
And what I do find is that anything that in India it expands into the other region, right? Into parts of Southeast Asia, the culture is much more similar than something from the US.
Yeah. Yeah, I noticed that you co-founded Angel Prime, which is a VC, a seed fund, right? Then why makes you decided to tackle this lending project and co-founded MoneyTap? And how did you get into the lending space, and why do you stay?
So so Angel Prime is now called Prime Ventures, it's a very good fund. I started with my best friends. My co-founder from Snapfish, which was my startup big startup in the US, which we sold to Hewlett-Packard, 𝗕𝗵𝗿 and I started Prime Ventures along with our friend Sanjay, who's one of the leading FinTech experts in India. And it was a good fun. Life was going on well until I kind of fell in love with this idea. So I just started talking to customers, and it seemed like a huge unmet need. And I felt I could make a much bigger impact actually doing a startup than funding startups. So.
Sure. Okay. Well, thank you, Bala. Thank you for having this one-on-one session with me. And now we move to our second speaker, Manish Kumar, the founder and CEO of kredX. Hi, Manish.
Hi, Boy. How are you?
Hi. Thank you. I'm doing well. Let's have some icebreaker. Give me one fun fact of yourself, please.
I studied actually civil engineering, but never used it. I, being a lifetime banker, started in bank and been working in banks and or financial services as such from last more than 18 years now.
Oh, you never know. This is interesting to know, but something you study, but ended up you do something else. I think lots of people have this experience. Thank you for sharing. So in terms of your company, I know that kredX is Indian first invoice discounting marketplace, and also connect to credit-worthy businesses into looking to raise fast working capital to investors, and both individual and into institutions, and looking for opportunities to earn above market average returns. So I guess you are trying to, like to my understanding, correct me if I'm wrong, but you're trying to bridge the gap and build for the, I guess, investor and individuals, and also with institution, and help them so that they can cash out their invoices.
Yep.
You
So,
elaborate a little more, please? Yeah.
Sure. So the concept is, in Indian financial services, mostly if I as a company go to a bank to raise a fund, whether it's a short-term loan or a working capital or long-term, the first thing they ask is collaterals, right? And when I'm a growing company, my collaterals doesn't grow with me. Right? Let's say I'm growing, my revenues are growing, but my assets might not be. A lot of services company may not have a fixed asset as such to give as a collateral to the banks. So what we thought is, why not solve it, right? Because every company who is in a B2B space, they are selling something to another company, right? So in a form, there is an asset, but that asset has never been monetized as such before. And if this receivables or account receivables or invoices is against another company, which is a very large company, then it's a very high quality assets in my books, right? So assume I'm selling it to a company like, let's say, Google or Amazon. and this is a receivables on my book, which is like an asset, but at the same time it's also a liability on Amazon books, right? So when I'm selling my assets, I'm actually selling a liability of Amazon, right? So it's a very high quality, almost like a AAA rated kind of an asset which is lying there. But when I go to the bank to raise the fund, the banks are asking me to give me a fixed collateral, which could be a land or could be a machinery or something fixed. So to solve that, what we thought is, why not have a platform where any company can sell their account receivables, which is a high quality account receivables, to anybody, not only to banks, but to, let's say, corporate treasury, to individuals, to fund houses, to family offices. So that's the concept on which we build it. We see the invoices more as a financial paper. It's a paper which is more like a negotiable instrument, or an instrument where you can be sold in the market, because it's a high quality instrument, right? At the same time, it opens a platform for the investors to invest in these kind of an assets, which was not available to them earlier. So there is a huge market used to be where banks was doing the bill discounting and then bundle this bill discounting product and sell it to mutual funds and others. But as a standalone, it was never there. So that's the thought under which we thought that why not have a new product, also have a source of fund which was hitherto not there. Like mostly in financial services, the source of fund is always banks and NBFC. So bring a new source of fund, a new product into the market, and let's try to merge them together for the benefit of all.
Sure. I noticed that there are three major products under your website, right? Working capital, growth capital, and also treasury income. Can you give us a little brief overview on these three products and what makes it really work in India?
Sure. So, treasury product is more of I would say is a very cheeky product. The cheeky product is why I said that a lot of cash surplus company, they're sitting on cash. They invest their treasury surplus in mutual funds to make money. At the same time, they do their vendors payment in 90 days. So what we did is we developed a platform where we say that we start a bidding platform where the vendors is going to bid that if they want the money faster, how much they are ready to give discount for, right? So and the treasury of the company is going to fund that invoices. So fundamentally, it's become a zero risk product for the treasury, and they're earning almost like 2x or 3x of what they're earning in the market. So that's why I call it is a more as a cheeky product rather than anything else. It's just like, assuming the treasury and the account payable department are two different companies, and they are coming to help it. On the growth capital side, again, what we did is we tried to extend the working capital side and said that in case of a SaaS companies, a lot of SaaS companies, what happens is they get in terms of stable or consistent growth, but it's not like a hockey stick curve where they can get funding from VCs, right? So, but they have a consistent, let's say I'm a SaaS company, I'm doing $1 million in ARR on a yearly basis, but I'm not growing. So it's become a catch-22 situation for them that if they're not growing, getting the fund from equity funding. At the same time, if they don't get the equity funding, they're not able to grow faster. So what we said is we'll develop a revenue-based financing model for them, where we said that if your revenues is consistent for, let's say, next 1 year, then we are going to upfront your entire revenue. We'll give you $1 million right away, and then you use this $1 million to grow. So you don't need to dilute your equity or do anything, but you can. It's more like a long-term capital for you, and your revenue is basically paying for that debt that you are borrowing. So that's the concept on which we started the growth capital product, and so is the other products.
Yeah, wow, this is fascinating, and I know that your firm has raised over 33 million from 3 rounds on Series B already. Congratulations. So, how did you get into the lending space, and why do you stay?
As I said in the beginning, I was always a banker. It's so I work with Citi, I work with HSBC, I work with Capital One, mostly in US market. So and banking sector, I can see being inside the banks that there's a lot of bottlenecks which are not getting solved. And my initial thought when I was in the bank and before starting up is that a fintech can provide a delta top up on what banks are doing. So, a delta top up on risk policy, a delta top up on technology, a delta top up on customer experience. But when I came outside, realized there's a huge opportunity out there. And when I'm seeing from on the outside, it's not only delta, it's like a much bigger and better world that can be created out of fintech. So it's more comes natural to me because of my experience in lending. Always felt very comfortable in lending, understanding. So I worked in risk, I work in sales, I work in different functions, different products. So it's for me, it's like a natural extension.
Good. Well, thank you for sharing with me, Mahesh, and with us today. Let's move on to our next guest speaker, 𝗕ญ่𝗂𝗏, co-founder and CEO of Simpl. Hi, 𝗕ญ่.
Hi, 𝗩𝗿, how are you?
Good, thank you. Please tell us one fun fact about yourself.
Well, I think one thing could be interesting is as I was growing up, my plans were to become a professional athlete. So I was on a path to becoming a professional squash player. And then life took a little bit of an about turn and I ended up here. So.
Oh, okay, that's interesting. Thank you for sharing. So Simpl is the India's fastest growing buy now, pay later platform. And I noticed that your vision is to have an inclusive digital payment experience for India and also empowers and foster trust between merchants and their customers. So can you elaborate a little bit more the problems that you try to solve and how you're going to help with the people?
Yeah, no, absolutely. So at a high level, what Simpl is, it allows you to buy anything online with one click and then pay for what you buy later at a more convenient time, thereby giving consumers unprecedented buyer trust so that you're not even worried about what happens when I make a payment and whether the delivery happens or not. So it builds trust, it builds convenience, and it helps people manage their budget. So that's kind of like what the product is. On the back end, the way things work is that it's like you see a button on mobile applications, online commerce, retailers in India. You'll press the button, it's one-click checkout. So it's like Amazon one-click checkout. It allows you to pay later all the transactions you do with that retailer or any other retailer that works with us into one bill for everything. So it's like a little bit like American Express. It gives you buyer protection like PayPal. And on the merchant end, it integrates with 2 lines of code and a very easy integration like Stripe. So that's kind of like what we have ended up building. If you want to step back, actually, before starting Simpl, I did not think I would start Simpl. I was on a very different career path. So very much like Manish, I used to work in banking. I used to actually in the US. I used to trade structured credit on Wall Street, so in New York. So that's what I was doing. And around 2015, I decided I want to be an entrepreneur, and I thought that meant for me start my own hedge fund. My last job was at a hedge fund, loved it, loved everything there, and felt it's time for me to kind of start on my own. And as I was thinking about it and taking some time off, I was just taking some time off. I was spending time with my parents in India. This is 2015, and around that time, Make My Trip and all these websites that do travel would not allow you to use your US credit card in India. So I had an Amex Platinum card I would use, and they would decline it. So I thought maybe I should get a credit card in India. So I went to my bank, ICICI Bank, with which I had a relationship since 2002. They had even given my student loan to me, and I had paid back that loan. That was about $150,000. And they declined my credit card application for a very simple reason that in India, I would be considered no credit file consumer. That lit up a lot of light bulbs in my head, and I kind of like just started noticing things that were very interesting. The first thing I noticed was, consumer retail is very quickly moving to the mobile platform, yet 70 to 80% of transactions are still done with cash on delivery. So even right now, in spite of everything that has happened in the country. So, notice that. The second thing I noticed was very, very few people in India actually have a credit card. So even right now, only 29 million unique people have a credit card. So RBI would say 59 million people have a credit, 59 million credit cards are there. The unique people are half of that, right? So 25 to 29 million people have a credit card. compared to 500 million people who have a smartphone connected to the internet. And almost 1 billion people who have access to this India stack, right? The UPI, Aadhaar, bank account, everything, right? So, when I saw those moving parts, I felt, initially I felt there's an opportunity to build a credit card company in India, like an issuer of credit card, which quickly evolved to the fundamental question. Well, in today's world, where we have today's technology, why build a credit card? Can you not reimagine the whole thing, right? Can you, if Visa was being started it was started in 60s, 1960s, 50s and 60s, but they had technology that was available then. The question is, if they had today's technology, which is everybody has a smartphone, everybody is connected to each other on the smartphone through internet, we have unlimited compute power, everything is on the cloud, and we have the machine learning AI technology, would we have the same thing that we call the credit card? And to me, the answer is no. And that's what the aim at Simpl is. Our vision is to build a credit card that converts basically any smartphone into a credit card. So the smartphone becomes the credit card automatically. And our mission is to build it in a way that empowers merchants and consumers over and above everybody else. Because my biggest problem statement around what a credit card stands for, it is the perfect business model for a bank or an issuer of card, but it actually marginalizes both the merchants and consumers. So that's kind of like how we are thinking about the future of payments and credit and what we are doing at Simpl.
Thank you for sharing. So one last question: what do you find it makes it really work in India?
Yeah, I mean, obviously there are a lot of reasons why it works in India. The first is very, very low credit card penetration. So, there are, let's say, 500 million people who have a smartphone, about 150 million people who are on e-commerce, use e-commerce, but only 29 million people have a credit card. So there is this massive market who does not even have a credit card, who could use this product to kind of like build more trust in e-commerce, slightly more affordability in their purchases and so on, right? So that's kind of like obviously one interesting reason why it works in India. There is another reason why it works in India, and it actually works around the world. And as you think about pay later and buy now, pay later, in one way or the other, it is happening around the world. So it's just not happening in India or in countries where credit card penetration is very low. It's actually happening in countries like Australia, US, or Europe, and UK, and Sweden, and so on, even where credit card penetration is pretty high. And the reason it's happening is when you think about the millennial consumer, the consumer, maybe there are 150 to 200 million of them in India and then so many of them in the world. One of the things about them is that they are not a citizen of a country, they're a citizen of the mobile internet world. And their life is about, buying things on Amazon, Flipkart, and so on, buying food on Zomato and Swiggy, listening to music on Spotify, Gaana, Savan, watching movies on Netflix, Hotstar, so on, and so on, right? And they have Amazon Prime, where you can click some buttons and everything shows up to their doorstep. They are on Uber and Ola, where you press a button and car shows up. And that's what they know, right? Any generation before that, when you think about financial services, know of a world where people used to line up in front of a bank. And here is a generation which kind of like has no concept of that. They just press buttons and things happen. And when you think about that generation, that's the same people around the world. The counterpart in India is exactly what they are in Sydney or Tokyo or Nairobi or Stockholm or San Francisco. And one of the common things about these people is they expect unprecedented convenience, high degree of transparency, and alignment of value systems of businesses they interact with their own. And which is where, I think the opportunity for everything in financial services is, how do you build, completely reimagine things, right? Like not just using technology to make things better. Obviously that's definitely a big opportunity, but I think there is one more, slightly more complicated, probably harder to execute, but how do you just flip the business model upside down a little bit in the favor of consumers, right? Where there is a high degree of alignment in business models, value system, and so on, right? So that's a big opportunity we see, in India and beyond.
Thank you for sharing. I totally agree with you. I think the potential and the opportunities in India are unlimited. So, and with that said, thank you for having me the one-on-one session with me, and we're moving on to our next guest speaker. Mr. 𝗕ហ៊𝗶𝗵𝗍𝗂, the group president from BharatPe. Hi, Simpl.
Hi, Bhavi, how are you?
Good, thank you. Please tell us one fun fact about yourself.
Sure. Given Bala has already taken travel, I will talk about, I am a scuba diving instructor, so I do still teach 3 weeks a year, each year, either in Mexico or in Borneo. And I've been doing this for now 15 years.
Wow, wow. Okay, that's interesting. Thank you for sharing. So let's talk about your company. BharatPe is a truly Indian payments company serving the offline retailers and businesses. So I guess you are trying to solve the problem for the offline retailers and their businesses. Could you please elaborate a little bit more?
Yeah, absolutely. I think BharatPe was started with a very simple thought that Indian retailers don't have a lot of money. Actually, they don't have a lot of margin to spend money on transactions. And if the government is trying to push towards a cashless economy, having payments, payment companies and credit card companies charge anywhere from 1% to 2.5% to merchants on a transaction is sort of not sustainable for the retailer and is sort of counterintuitive to making the economy cashless, right? So we started with the premise of trying to make payments seamless and free for the merchants, and that's where we started the UPI-based QR payment acceptance. I think what we realized over a period of time that payments is one part of the puzzle, and with UPI coming in, a lot of our partner fintech companies and the government are all trying to solve for this. The second big use case really is credit, right? So we work with lots of small merchants. And if we look at the need of credit, like anyone's estimate is anywhere from $500 to $800 billion a year. And these are people who don't really get credit, right? Because they don't have large enough banking history. Many of them are new to credit. Many of them have very small income tax returns, if anything, and therefore conventional banks will not sort of lend to them, right? And their need for capital is typically short term, and very similar to what Bala was saying. The need for capital is very short term. They need the capital now. And if you need a 20,000 rupee loan, the bank will not give it to you, but you don't want to like spend 2 days chasing a bank executive, visiting a bank, filling out all the papers, sometimes giving up collateral for a loan, which is a very small loan, and you probably need it 12 times a year, right? So, and that's where we started sort of lending to merchants. And again, we use a lot of our transaction data, ML, AI on top of that, beyond the conventional methods employed by all banks. And again, this is probably a theme which all the companies on the panel will go through, and started lending to them. And we realized that it's sort of a win-win, right? Because it allows us to monetize what we've built on the payment side. Most of our retailers are happy. And the way I say they are happy is they all come back to credit, right? So they take second loans, they take third loans. Over a period of time, we help them build their credit history, which allows them to go to lower and lower cost of interest, right? So that's sort of what we are trying to solve. So therefore, we see ourselves as a payment and a lending company, and that's sort of and all focused towards SMBs. We don't work with conventionally large merchants who have access to bank finance. We don't do anything online.
Thank you, Sahil. So speak about the product, right? You do have a personalized QR code and bills discounting and even no data sharing with the e-commerce retailers. Can you tell us a little bit more about your product?
So yeah, so it's a very simple product. It's a QR code which you will see in multiple retail stores in India, and my colleagues at Paytm do it, Google Pay does it, PhonePe does it. It's just for the, we were sort of one of the first ones to say that use any QR code, any payment app and sort of pay on our QR. It's not necessarily a novel idea from us. The technology existed with a lot of players. We were the first ones to sort of promote that. And I think this product basically based on the cash flows which flow through the app or which flow through our banking system allows us to underwrite loans to the merchant, right? So because we know how much money flows into his bank, we can create a collection mechanism where we collect what we have to take from the merchant from this money flow which flows through us. And then as we started building this up, many other use cases came in, right? So channel financing, financing distributor to retailer sort of payments or vice versa. And then products around sort of incremental use cases for the merchants. For example, if you have to buy an insurance for your shop, be my guest and I will allow you to do that. If many of the Indians in general and a lot of merchant class invest in gold, again, my colleagues at paytm were probably the first ones to do it, but we also are sort of allowed to do that now. And but I think the core of the business remains a simple loan product. Any merchant can see what he's transacted on the platform. He can press a simple button for saying, I need a loan. The system automatically calculates what is the maximum exposure we can take on him. And then we give the merchant the option of going down from that, extending the tenure, reducing the tenure. And if it's a merchant who has a reasonable track record with us, by the time he clicks the button till the money is in his bank, it's sometimes less than 2 hours, right? So it's sort of instantaneous money flow, and a lot of this capital need is actually working capital financial requirements. A merchant will not want to wait like a week for a loan like that, right? So I think a lot of our effort goes in how to make this transaction as seamless as possible. How can we disburse the loan like literally in 2 minutes from the time the merchant sort of clicks the button?
Sure, thank you. So one last question. I noticed that you just joined BharatPe for 3 months, and obviously you do have extensive experience, with companies in terms of consumers, energy, financial services sector. But what made you decided to tackle this subject, and how did you get into the lending space, and why do you stay?
Absolutely. I think it's a sort of an interesting journey. A lot of it, by the way, got triggered by my consumer experience, because consumer touches millions of merchants, and you realize sort of the kind of struggle they have on working capital, the credit they get from the distributors, what terms they get it at. Big brands will not offer them any credit. Then it's at the mercy of the distributor. Banks will not offer them credit, right? So you go to this, you go to the market and like talk to 10 retailers, and everyone talks about credit as a challenge. And I think second part of this thinking is like actually way back even before BharatPe was started, 2016 demonetization, and we saw what that did to digital payments, and actually Paytm did a fantastic job of sort of building the payment system in India at that point of time. I think it was very clear that the world is sort of moving towards digital payments and digital financial solutions. So when sort of BharatPe started in 2018, I actually knew the founders for quite a bit by then, and I was sort of the angel investor in the company. So I invested in the company in 2018. Like was really excited by what they were building, and sort of had been trying to move into the business for the last 6-8 months, and finally sort of happened early this year. I think what I find really exciting is there is a huge demand for credit in India, right? And conventional companies have not been able to sort of fulfill this. And I think given what many of us have built on this panel, I think we've got access to unique data, unique insights, which can enable us to really serve this, I would say, one of the most credit underserved part of the country, and this is a potential to build something really big and a potential to build something really meaningful for the country, right? So that's what keeps me exciting. I've been here 3 months, and it seems like I've spent all my life here, and hopefully like for many more years to go.
Absolutely, thank you. And I noticed that BharatPe has raised over 140 million from 4 rounds, and you're on Series C already. So congratulations. Thank you for having a one-on-one session with me. And let's move on to our next guest speaker, Mr. 𝗕𝗹𝗿𝗂𝗵𝗿, CEO of paytmMoney. Hi, Varun.
Hi, Boy. Good
Hi.
afternoon.
Good
Pleasure to be
afternoon.
with you.
Yeah, thank you. Please tell us one fun fact of yourself.
So I think Bala took over travel. Suhail decided to go undersea. I decided a couple of years back to do skydiving in Zimbabwe. And I did it on 31st December over Victoria Falls with the last sunset. So it was pre-planned for months together. But you know, the experience was so horrifying that by the time I came down, I promised myself, I said, the site is great, but it's never worth going on a plane again to skydive, right? So, yeah, you know, but I have to take classes from Samir because I really enjoy deep sea diving and just learning. But I'm going to hook him up, and thank you for, you know, the one output of this panel is ice breaking helps.
Absolutely. Yes. Thank you. Thank you for sharing. So let's talk about PTM. PTM is an Indian e-commerce payment system and financial technology company, and it's huge. I think, to my knowledge, is valued over 10 billion already, USD. Congratulations. So, tell me your company's problem statement. So I guess you're having a one-stop shop platform to have all the retailers to connect to these e-commerce payment. And what are the major problems that paytmMoney is trying to solve?
So, you know, Boy, I'll separate a bit Paytm and paytmMoney. So Paytm, you know, as you know, is now valued at about 16 billion US dollars. So it's a fairly large enterprise. It has about 70 plus business lines. I had one of them, which is paytmMoney, but I'll start with Paytm, which was your question. I think Paytm has this mission statement to get 500 million Indians to be meaningfully financially included. Right now, when you look at it as a statement, and Vijay, who is fairly an important entrepreneur in India, is really passionate about Indians getting meaningfully financially included. Now, that's a big journey to make, which step by step Paytm has done over the last 10 odd years. And I think the last 4 years for us have been fantastic. So we have obviously our e-commerce business, our payment business is our moat. We have about 300 million plus consumers. We have about 20 million merchants. You know, we have maybe 40 to 50% market share in FASTag, which is the toll system. Then we have the bill payment system. Then other than that, we have the financial services businesses, which are new, large. So we have lending, which has been in a pilot for the past 18 months, where we've done about 50 lakh loans. So that's typically a pilot for us, right? So it's a large pilot. Then we've had the wealth business, which I lead, which I talk about in a bit in more detail. And then we have the insurance brokerage business, and we very recently acquired an insurance company. Other than these businesses, we've got e-commerce business, a social platform business, and we've launched a thing called Paytm First Games, which is now India's first gaming company, right? So we've got a whole set of things all bundled into one nice app. And then we acquired a banking license, which is Paytm Payments Bank, where we've now had about 60 million users, KYC, and it's a profitable bank. So what we see coming through is using financial services, using digital payments, using the rails of we've built, what the regulator has built, what 𝗕PCI has built, to create a whole ecosystem of Indians who can buy and live their life in a simpler, easier way. And I think as Paytm, we would love to power that, be it on the merchant side, be it on the consumer side. I think we are large enough now to be able to power India in a certain way, which we think is the right and the good thing to do.
Wow, thank you. Thank you. Yes. So how about, based on your experience, what do you think, what makes it really work in India?
So I'll talk about paytmMoney. I think it's important because, you know, that I can credibly talk to you about and say what makes savings and investment works. Because everybody else on the panel spoke about lending. I want to talk a bit about the reason people work. Most of it, people work 50, 60, 70% of their lives to save a bit of money and make sure money is not the only route to happiness, but money plays an important role, especially in the life of a developing country. So paytmMoney today is having 4 product lines. So we have mutual funds. We are India's #1 SIP distributor or mutual fund distributor, and we launched about 2 years back. The second business that we do is digital gold. So digital gold, we have about 5,000 kilos of gold transacted and about 50 million plus users. The third business we have is equity broking, which we recently launched, 12 weeks old. We have about 200,000 clients there. And the last one is pension planning. Now, what do we see differently and how do we look at it? I think when we first came to mutual funds in India, everybody was offering regular funds, which basically means that you pay a 1% commission for the rest of your life. So if you've invested about 10 lakh rupees and you take 10 years of it, every year you pay 1% to your distributor, which you don't know about, but you're paying. So we were the first ones to come and say, hey, look, let's do direct mutual funds. And let's take the ticket size from 1,000 rupees, 500 rupees, which is what a typical banker would ask you, or a wealth manager would not even talk to you if you talk small amounts. We reduced it to 100 rupees. To give you an example, today we have customers from 99% of PIN codes in India saving into a mutual fund. We have 6.5 million customers. So when you have 99% PIN codes in India, which is bigger than the Indian Post Office, investing in a mutual fund product with you, you're starting to create a revolution, right? And I think the success of that has been super easy. Consumer first, we are very transparent, and the ability to bring costs down. So we've brought costs down by almost 1/10. We've done the same on equity broking, for example. We've launched our pricing, which is free for delivery. So if a customer wants to come in and buy a stock and keep it for his life, it's free. And if a customer wants to trade, it's 10 rupees a trade. These are lowest rates anywhere in the world. And we managed to do it because in the heart of it, we are a tech fin and not a fintech, right? So technology comes first in our company. And I think the passion to say, can I go and get 500 million Indians? I think the passion continues. And that's what makes it a bit special and a bit different.
Sure. Thank you for sharing. One last question. I noticed that you just joined paytmMoney for about 4 months. And what made you decide to tackle this subject? And how did you get into the lending space and why do you stay?
So actually, I've been a retail banker also. My first job was a sales job in Citibank in 2003 in Cochin, where I used to be on a bike wearing a blue jacket, and you could buy personal credit cards, insurance, anything that you want. I was like a financial mobile supermarket on my bike, right? And I started my journey there. Then I left India in 2008, and up to 2015, like many others, I was outside India. I was working with 𝗕𝗵𝗿𝗵𝗵 in Paris, and I had this huge passion saying, hey, Mr. Modi was running around, and I was very impressed with his ability to say, hey, look, let's take India to the next level. And I had very recently at that point launched a digital bank in China. So I had seen the impact that Jack Ma could have and how we could bring 600 million people to invest in mutual funds, right? It's 600 million people who invest in mutual funds in China as compared to 50 million in India. And I said, that's happened over a period of 1 year. It's fantastic what Ant has done. And you know the whole story around the Ant IPO now. But beyond all of that, I think in 2015, I recognized that India is going to start that journey. And so I came back to India to buy an equity broker, which is called Sharekhan, on behalf of BNP Paribas. So I led that company. I managed it for a while. But 8 years in BNP Paribas, I started to get a bit tired of somebody sitting in Paris trying to tell me, hey, look, Varun, this is what should run India. And I quit one day. And then I was working with Oppo, OnePlus, Realme for a year and a half. And I couldn't find a place to align my vision because I was very passionate about India. I was very passionate that when can we have 300 million Indians have mutual funds? We have 50 million today. We have only 10 million people active on the markets. When can that be 100 million people trading in equity? And to do that, I needed a home. And when we met Vijay said, hey, Varun, I have a tour for you. I said, hey, I want to do a job. I want to become an entrepreneur. But if you want to make me an entrepreneur, I'm all up for it. And so my journey in paytmMoney started with a very personal mission to say, can I one day be the guy who had a legacy to get 300 million Indian people to invest and manage them better, which unfortunately is done very poorly because we produce great engineers, architects, learners, astronauts, speakers. But in our whole education system, which I think is the best in the world, we don't teach financial education. And I think that's the problem to really solve.
Thank you for sharing, Varun. And let's jump to our next exciting session, which is a panel discussion with 5 distinguished speakers. So I have prepared some questions for our panel. My first question goes to Bala. What is the biggest challenge in the lending space at the moment, and how can we advance the lending space in India?
Yeah. The opportunity in lending obviously is huge. Every panelist has talked about this, and that's kind of why I'm doing it. The challenges are mainly with the stability of regulation. So in most Western countries, and even in most like markets like Singapore and other countries, the regulator is it's relatively stable, so you don't have sort of an email coming at you saying that something is different, you change this in like 2 weeks, right? So the last 2 years has been particularly sort of turbulent, and for startups and all banks, everybody as well in the whole industry, is to constantly watch the regulator, try to predict and navigate. That has been sort of the biggest challenge, I would say.
Sure. Thank you, Bala. How about your views, Nithya?
All right, sorry, I was on mute there. So in addition to what Bala said, the regulations, that is definitely, one of the reasons why industries like fintech and health tech, healthcare, etc., are slow to innovate is, there is definitely a public element to it, which is obviously important, and therefore sometimes innovation can get slow. So that's definitely a challenge, as Bala illustrated. But I think the other challenge, which also I feel is an opportunity for startups, is the lack of credit data. So, one of the things that is true for any, if you think about credit bureaus, right? What is a credit bureau? Well, to have credit bureau information, you need credit first. And to have credit, you need credit bureau information, etc. Right? So, it's a chicken and egg problem. And in India and most emerging markets where consumer credit or SME credit, etc., hasn't scale to any large amounts, the data is very, very slim. And that obviously becomes a barrier to giving a lot of people credit, consumers, SMEs, etc. So that's a challenge. The opportunity is that we are living in a world where, the world is different from how underwriting was even invented 50 years back or, however long. And we are living in a world of unimaginable amount of data. And that world is getting more and more interesting, right? So there's more and more data. And the question is, how can you, complement what the bureaus have and take the other data, call it big data, to be able to provide better underwriting results for that consumer who does not have the bureau data or has the data that is very, very thin. So I think that is the challenge. And I think that is also the opportunity to build IP and technologies to be able to predict default probability using other data. In our case, what we are proud to have done quite well is most of our underwriting is based on behavioral data. So it's not even credit underwriting; it's really about intent, right? So we predict trustworthiness as opposed to ability, etc. Right? So and then we take other data points to build the next layer of models around ability. So I think that's a challenge, but to me that's the opportunity to build long-term sustainable intellectual property that could create more and more value in the business.
Thank you. Thank you, Nithya. How about your views, Varun?
I think on the lending side, I'll take slightly different context. I strongly believe that the startup ecosystem will forever do a better job than the large banks or the large lenders, because they'll continue to innovate and push the boundaries. It's like a rubber band, right? And they'll continue to expand it, they'll continue to stretch, and they'll continue to innovate. Now, to do that, funding is needed. And I think the fundamental problem of lending in India is liquidity. And the way liquidity has to be solved is to get the capital markets going. And therefore, I think if there's one thing everybody could solve is securitization. Because as long as the small startups can get the credit, but get them off their books so they can get new credit going and it's a very simple thing. Securitization is a very complex word, but behind it is simplicity. Now, the Indian securitization market is hardly existing. If it is existing, it's not liquid, it's not traded. So I think if fundamentally things have to change, I think India has now come to accept that lenders will always exist, large ones. The small startups will now have an important role to play. And I think if you combine that, the missing element now is the growth of liquidity and the growth of what I would say is the securitization marketplace built out. So retail investors, HNI institutions can participate. And that doesn't exist seamlessly on a mobile phone. And I think that's the problem statement to solve over the next 5 years for the industry to grow.
Thank you for sharing. My next question goes to Sahil. How has the lending space changed in the past 5 years, and what do you predict will happen in the next 5 years?
I think tons have changed, right? So just the sort of proliferation of smartphones has allowed us to capture so much data, which was not even sort of envisioned by the classical fintech lenders, right? So whether it is access to your calls, SMSs, bank details on your phone, whether it is actually the digital transactions which are flowing through some of the fintech apps, I think that sort of enabled a lot more data access and a lot more sort of ability to underwrite people who are classically, many institutions will call them subprime, right? So, but just the transaction data on their businesses, just seeing how much business they sort of do. And this is sort of becoming increasingly more and more as sort of the digital payment methods, whether it is the QR, whether it is the credit cards or the debit cards, as they sort of start taking a larger pie of the transaction, I think this data will keep on getting better, right? So, so I think gone are the days where you will, especially as a fintech lender, lend on the basis of CIBIL score alone, right? So CIBIL score for many of my merchants I actually lend out to is very, very low, right? It is low not because they are defaulters, it is because it is low because they are new to credit. They're probably even new to banking in many cases. They've never taken a loan, and if they've never taken a loan, your CIBIL score by definition can't be too great, right? So, so I think just this use of data and figuring out different algorithms to lend is, I think, one big change which has happened. I think the second big change which has happened, which is what Bala talked about in the beginning, is sort of micro loans, right? No classical bank will think about a 10,000, 20,000 loan in the old world. Because just the cost of processing the loan, the cost of collection the loan, and the money you make at the end of it was so small that it was not possible to think like that. But I think a lot of digital lenders with low cost of disbursals, in my case, for example, and in many other cases, actually literally no cost of collection because the money comes automatically back on the QR. It allows us to do micro lending, small ticket as well as small time lending much, much better. And I think, so I think that's what's sort of changed. At least 90% of my loans are to people who have CIBIL scores probably less than 600, right? So, so that's a big shift I see. And I think increasingly as we go forward, more data comes in, WhatsApp comes into payments, you will start seeing a lot more democratization of actually who gets a loan, right? So that's at least to me the big shift, and I see that playing out increasingly more as we go ahead.
Thank you, Varun. Minesh, are you here? Manish?
Hey boy, I'm sorry, my internet got flaky.
Yeah, we were talking about, how has the lending space changed in the past 5 years, and what do you predict that will happen in the next 5 years? What are your views on it?
I think we are seeing every day how lending has changed in the last 5 years. What Bala is doing from, giving you a credit on phone, literally without having any credit card or anything, or the concept of simple with buy now, pay later. Right, or even the merchants getting advances or loans without any collaterals, with everything digital. That itself is saying how much lending has changed over the last 5 years. But I still feel that we haven't seen everything, and maybe a big part of it is to do with the regulations piece. Still the KYC, we have to do it, physical KYC. Still some of the parts are not very clear in terms of how we'll do it. But if you ask me how it's going to change, I think a few of the things like sachetization of the loans, having instant dispersal or instant access to credit, more democratization of credit is required. One simple thing I tell you is like, even in, let's say, home loan, right? What happens is that whether it's the banks or the financial companies more evaluate whether I have to give it to you or not give it to you, right? But the prices doesn't change. So even if a person is earning, let's say, $1 million a year versus somebody who is earning, like, let's say, less than $100,000 a year, if both goes to take a home loan, they are going to get the loan at the same interest rate. So as a customer, you don't have the bargaining power more than maybe 10, 20 or 50 basis point to say that, hey, my profile is better or my risk is lesser, so why don't you give me a pricing associated with the risk that the bank or the financial institution is taking. So these are the things which is still, I would say, not there as of now in India. The concept of risk-based pricing, the concept of instant dispersal, instant credit, or in a nutshell, what you say is the credit democratization is still something which we hopefully will see in next 5 years, or maybe early also. But that is definitely something which we are going to see soon.
Thank you, Manish. Question. What's the most interesting trend for 2020?
Maybe your voice broke in between. Could you please repeat the question?
Yes, sure. My question is, sorry, can you hear me well?
Yes.
Yes. So I was talking about with the COVID-19 impact, what's the most interesting trend for 2020?
𝗕𝗵𝗿, who's this question for?
Question is for Sahil.
Oh, sorry. I didn't hear that. No, so to me, I think just how digital payments have grown. I think my parents would sort of never use digital payments. I think they didn't even have a single payment app on their phone. And now they have at least 5. And we've seen Feb, we were all worried that retail is sort of tapering off, or March, we were sort of really worried about retail is tapering off. I work in predominantly offline space, which is sort of been impacted a bit more due to COVID because the shops have been closed. Still, the payment volumes which sort of are flowing through us have gone 4x, right? From I'm not even comparing it to the lows of April. I'm comparing it to the previous peaks of Feb, right? So, so just how a lot more people are now paying digitally. A lot more people are using QR codes, not to make like small ticket purchases of 10, 20 rupees, but even larger ticket purchases, right? Because at one level, a UPI based payment or phone based payment is the most touchless payment, right? Even credit cards, you have to sort of give a credit card to someone, he swipe on your machine, you will have to put in a four-digit PIN or a 6-digit PIN. It's not really no touch, right? So we've seen people who've historically not had any use of digital payments start transacting. We've seen merchants reach out to us for enabling their stores to go digital. And this is versus like I having to run after each store and trying to explain them what a digital payment is and how does it work, and that the fact that their money is secure with us. I think that's a big shift, right? And 4x jump when retail is not fully come back. We are all very hopeful as sort of the real jump is actually a lot more, and we'll probably get to see that in the next few months.
Sure, thank you. My next question goes to Nithya. Which potential policies of the new administration present opportunities or challenges for the fintech firms? Nithya?
Yeah, absolutely. So in my view, one thing is very clear about the administration right now, and it seems like broadly in India, that promotion of financial services as a basic right for anyone in the country is part of the policy, which is why I think we see such innovations like Aadhaar, the India Stack, the UPI, and the fact that every single person in the country has the bank, right? And I think what the fascinating thing about this is that when you look at India and compare it to any other country in the world, including the most developed countries, you obviously see a country where we have the most amount of banked population. So pretty much everyone who is an adult has a bank account. Money moves between bank accounts, real time, 24/7 at no cost on UPI. And if you think about what that means from a technology lens, it just means that money sits in bank accounts, and therefore bank accounts are servers and money is data, and UPI is what connects the servers, so to speak, so that the money can move frictionlessly, no cost, etc. Right? And so what the administration ended up doing is created the Internet of Money, is how I think about it, which gives a massive opportunity for entrepreneurs like all of us to stitch together this fundamental infrastructure, which is around money and KYC and security, etc., and provide consumers user experiences that they want and what they want to consume. So that's kind of like where I see this going. These things, because of government's involvement, sometimes have its own ups and downs because obviously, as administrators, they have to think about 1 billion people. So something that might be good for you may not be good for the next person. But overall, I think the trend is very interesting in a way where digitization of everything that is money is clearly happening in India. So that's super exciting, and that's what I think motivates me to build Simpl and make it.
Thank you. How about your views, 𝗍𝗏?
I think from my perspective, the main thing that is going to change after COVID is as follows, right? I think the Indian technology revolution, the mobile space, is already waiting to happen. I think we're just accelerated it 1 billion X, and now the proof of the pudding is on the table. What's going to change after COVID is I think leading companies will discover the confluence of what I call data plus technology plus emotions and business. Because I think the future leaders or the future winners of the fintech space will be the ones who've kind of thought about these 4 things together. So a business model, how do you get the analytics right to make sure that analytics talks to technology? Because I think data analytics was present in India, but it's not really talking in a real time, in a mass way. And I think the 4th element which is missing, which I see some of the new companies working on, is how do you bring human emotion into all of this? Because at the end of the day, human brain, nobody's, with all the AI, ML, and all the fancy words people use, nobody's managed to replicate a human brain till now, right? And the human brain continues to be the most powerful because it's able to absorb different types of data, different types of signals. So I think the future post-COVID is many companies have gone back to the drawing board and said, what's my R&D team going to work on? So not in 2020, but in 2025, who are going to be the winners? And I think that, in our mind, at least in my mind, is the confluence of these 4 things. And I think that's going to be the big change that you will see.
Thank you. My next question goes to Bala. What is one piece of practical advice you will give to someone starting out? And what is the best resource for people who wants to dive in deeper?
I presume the context is for in general with fintech, not just lending. So my advice is that I think fintech, we're in very early days. So if you're thinking fintech, it's a good place to be. I think there's still a lot of innovation to be done. However, it's also treacherous. On the plus side, the opportunity is just humongous. You can actually make money. The technology is fast changing, so you can always find a gap and just enter in there, right? And like what BharatPe has done, like super successfully, and everybody in this panel has done, right? They've found like a one gap, and then you enter, and then you can expand in there. And there are lots of gaps because things are moving all the time. So new gaps open up. So you're in the right place if you're thinking of starting a company. The only downside I would say is that make sure you fully understand, what the regulations are, because the regulators are not moving as fast as the startups are. But finance is regulated, not only in India, everywhere in the world. In India, definitely more so. So just to, completely let me just break stuff and fix it later. Like, for example, what Uber does, right? In the transportation industry, that's what they've done. I'll go into a city and I'll figure it out later, or Airbnb has done. That's generally a good thing to do in entrepreneurship. And when you're revolutionizing an industry, it's important to sort of think out of the box and break the constraint. In finance, you have to watch out for it, because the Indian regulator, specifically RBI, is a fairly, they're very strict, and everybody follows the RBI. You can't like cut corners and get away with it. So,
Yes.
but there is a way to play with the regulator. MoneyTap does it, and many people in this panel do it, right? So there is a way to manage the regulator, understand, talk to them, engage with them, and think of that early. And this is not an advice I would give if you're starting a company in whatever, even in health, for example. Indian regulations are not that strict. But when it comes to health tech, right? When it comes to FinTech, it's pretty strict. So I think good news, it's a big opportunity, but it's also got, you need to know your game. And lastly, if you're thinking of lending, so lending is one of those places which everybody thinks, it's a very obvious place, because lending is the place in India with maximum revenue, right? Banks in India make 70% of their money in lending, in some form or the other. So it's very tempting. Everybody thinks like, I'll have some data, I'll have some AI, and I will lend, right? This is kind of like the thing. So everybody who's been in lending for a few years will tell you that it's not so simple, right? So don't just assume, right? You can raise a lot of equity money and burn it. But lending is a tricky path. So there is a certain discipline to it. But it's not like it's not doable. Many of us have done it, but it's just that you need to know what you're doing.
Sure.
Especially the lending part of FinTech. Other parts of FinTech. Okay.
Thank you, Bala. How about your views, Manish?
Sorry, Boy, can you repeat the question again?
Yeah, my question is, what is one piece of practical advice you will give to someone starting out? And also, what is the best resource for people who wants to dive in deeper?
I think one piece of practical advice I would give to people is, to basically maybe, just go with it, rather than thinking too much around it. I've seen people spending too much time in building products, trying to make it perfect. I would rather say time to the market is more critical than anything else. Everything else can be worked out. What we need to figure it out is how we can, if we have to launch something, how we can launch it clearer or faster into the market, rather than betting too much on that, how I can get more and more things included into it, how my product is the best product or the perfect product in the market. Generally, what I say is there's nothing called perfect. What is perfect today can be imperfect tomorrow. So rather than waiting for that perfect product to come, we should rather focus on time to market, launch it, get the feedback from your customers, and then move on to do that. What is to have the next set of exercise or next set of innovation into the product. I'd also suggest that everybody has to do more and more innovation. If you're not innovating enough, that means that it's a short way of failure. So there will be something there. I call it more as experiments. All experiments will have failure and success. Some experiments will lead to, or most of the experiments will lead to failure. But at least we are learning more from it, and we are going ahead in terms of the innovation that will be coming up in the market. For entrepreneurs or people who wants to deep dive into the problem, I would say the best piece of knowledge is available is with the fellow entrepreneurs. Talk to as many as possible. I always see any problem as I may not be the first person to face this problem. So why I need to reinvent the wheel? Why I need to solve it? Why not talk to 5 people and find it out how they have solved it? So typically that is, and there are less books available on these things rather than, I would say, it's a practical experience of your fellow entrepreneurs or people like Bala, who has done multiple ventures in the past, has a track record of success. These kind of peoples are basically your resource. I always feel that in India, we don't have that mentor ecosystem, which is very much there in the valleys, where people can, and we have a very, I would say, a wider gap between that. So we used to have entrepreneurs, or like a bigger set was Nandan Nilekani and Nayan Murthy, but then there was a big gap that has happened in between, and now we are getting an influx of a new set of entrepreneurs. So I think we all of us as an entrepreneur has to come forward, help each other, and see that how we can help anybody and anyone to come out the curves, or help him with the smaller things, right? Even to how to do fundraise, to how to why to do fundraise. That could also be a question, right? So the best way is, I feel, is the fellow entrepreneur on that.
Yes, I totally agree with you, Manish. Having a startup, it could be a very lonely journey, and the market is brutal. So I think the best is to get acquainted with many people in your field, and obviously the problem that you're facing you might not be the first one facing it. And obviously it's good to share with others and get advice. So I'm mindful of the time, and I'm moving on our next session, which is the Q&A from the audience. And thank you everyone for submitting the questions, and we have received quite a lot of them. So I would just pick some of them and ask our panelists here. So the first question goes to Sahil. What's the importance of alternative data other than financial record in current ecosystem, and do you use it? What's the importance of alternative data?
Yeah, actually, sorry, the question was for me, Bobby, right?
Yes, that's good. That's
okay, sorry. No, actually, we predominantly use alternate data. We actually don't reject a loan application based on the CIBIL score or the bureau score. The only thing we check in the bureau score is the bureau score low because there is a series of continuous defaults, or if that is not the case, bureau score can be low for like multiple reasons, then we just discard the score into the bin, right? So we only use transaction data on our platform, like history of transactions on our platform, length of time on our platform, as the core underwriting criteria, right? So if you've been on the platform for let's say 6 months and you're doing like monthly transactions of like, let's say, ₹1,00,000, I will by and large give you a ₹3,00,000 loan for a 6-month tenure, right? So that's sort of how we do the underwriting. And of course, this changes a bit on your length of history, your transaction number of transactions, your periodicity of transactions, how many unique payers you have on the platform versus like, is it just 10 guys making all the transactions on your product, and what sort of a business you are in, which city you are in. But this is all sort of alternate data, and none of this is sort of built on the conventional lending algorithms or conventional lending reports you see, right? So, as the platforms become richer and richer with like more merchants onboarded, more sort of length of existence, we will sort of continue to tweak this, and I'm sure there will be a day where we'll probably not even look at the bureau data of the past.
Thank you. Here's the question directly send it to Nidya. Do we see Simpl stepping into B2B space in the near future?
Sorry. So in the near future, we do not see ourselves going to the B2B space. Right now, we are laser sharp focused on person to merchant payments in online space. So that's where our focus is. Long term, definitely see a need for something like Simpl for B2B as well, but that's not our current focus.
Sure, thank you. Here's the next question to Manish. Will supply chain finance be able to go to the next level and become unicorn?
Yeah, of course. Why not? It's a huge market fundamentally, and typically, if you see in India, we have a GST return on a monthly basis of closer to around 1 lakh crore. If you assume that's a 10% of the invoice value, we are talking about 10 lakh crore of invoices getting generated in India. If we assume, let's say 50% is B2B, we are talking about 5 lakh crore worth of invoices every month that is getting generated. And typical Indian payment cycle in B2B space is around 90 days. So you're talking about 15 lakhs crore worth of market. I think that's required to be solved, and I think that's where it's a fit market for a unicorn to come into it. I think a lot of companies are working towards it. I remember 5 years back when we started, bill discounting was something which was hitherto unknown. It was mostly been done by banks. Now we see so many TREDS platform, bill discounting companies, supply chain financing has become one of the major concern, one of the major source for even banks. Recently, HSBC along with 10 other banks has came out with a blockchain-based supply chain financing platform. So definitely a lot of things are happening in supply chain, and I think we have not even scratched even like maybe 5% or 2% of what can be done in supply chain financing.
Thank you. Here's the next question to Varun. Do you think the future of cryptocurrency would be a nested hub of various small independent marketplaces connected together?
Well, the future of Bitcoins, the future of cryptocurrency is very hotly debated topic. In India, there was a moment where everybody was happy because we all thought cryptocurrencies finally arrived. Then it went to Supreme Court. It's been doing the rounds. I think the core question on cryptocurrency is as follows. Personally, I'm a fan of it, and I hope that the Indian regulator, Indian ecosystem, and players come around. But what is the future going to look like? I think the biggest problem or the biggest success story of a new investment vehicle lies in a lot of retail investors picking it up. So let's say 10 million investors have to invest into Bitcoin. Only then it's serious business. Now, for that to happen, the first person you need to protect and the only person you need to protect is the retail investor, right? Because he or she doesn't know what he's getting into. There's normally FOMO, which we fear of missing out. And so everybody jumps in and says, let's do this. And I think that's where the regulator comes in. The future, I think, will be somebody in India owning the Bitcoins, guaranteeing at least that there is a safety behind it, like currently it happens with digital gold. There is a government of India entity, there's an ID appointed as a trustee. So you know that when you're buying digital gold, the gold is actually stored somewhere. It's not somewhere in thin air. I think so that's problem one, which the industry together has to solve. And I know the regulators are working on it, so that's good news. And they're positively inclined to solve the problem. I think the second topic on Bitcoin, which we need to clear out, is the anti-money laundering. The fact is, anti-money laundering, terrorist financing, and all those wrong things are not good for anybody. And till that gets solved, both these things, the Bitcoin business in India at least will not take off. But expect in the next 2 years a lot of action on this topic. And I see in the next 5 years' time, maybe many of us around the table, around this panel, actually owning Bitcoins, right? So I think it's a very exciting space, and hopefully, if it does, please do invest.
Yes, I agree. PayPal just made the announcement a while back. They opened up to the cryptocurrency as a service. So I think the cryptocurrency definitely has a huge potential and opportunities there. But just bear in mind, always have to do your due diligence and research before you deep dive into any investment. So my next question goes to Bala. What are your, how do you see the fintech space in the next 5 to 10 years?
Yeah. First of all, I see explosive growth. again, much has been said about UPI and payments, which is just on fire right now, even more so. So you don't need to repeat that. But overall, I see a shift away from banks. So like I think it has happened in every industry, right? I mean, Netflix has come and destroyed, Hollywood, and every industry has gone through this massive transformation. The bankers were relatively protected only because they had a license, and the license effectively allows them to print money, and it's protected by backed by the government, right? Like banking, I always say, is the best business because even if you screw up, the government will come and bail you out, right? Like we saw with several banks in India and abroad. It's not only unique to India, but I don't think they can resist the tides of change, and that's where I think startups are going to play a role. Might not be the the bank of that we experience today. It'll be the bank for the next generation, where they don't know anything but digital. These are the Instagram generation, and they're starting with on a phone, and that is where startups will come in. So the word bank might be sort of redefined, is what I expect. And sooner or later, the regulators will have to give a license of some sort. And you can already see they've experimented with payments bank. They're kind of slowly getting there. And when they do, when the license happens, and most of the companies will broadly converge, right? Paytm is already a sort of a digital, already has a payment bank license, and it's already a bank of some sort. BharatPe. Everybody in this panel will sort of evolve in the same direction, coming from different paths, and it'll be a loose definition of bank, but that's what I see all of us sort of heading towards, because once you have a license, that's I think somebody in the Q&A asked a very good question, saying, hey, there is 35 lakh crores of sort of loan applications that have been rejected. That means like roughly that much demand. It's kind of a good kind of proxy for demand. And how much will startups ever touch? And I think like Varun said, one of it is securitization, the other is cost of debt. But ultimately, when you get a banking license, that's when you will have the maximum ability for startups to really fly. And so anyway, short answer, I see everybody evolving towards sort of a next generation bank of some sort. And that's what I see happening in the next 10 years. So there'll be multiple players. It'll definitely not be one. The government won't allow it. And the market is too big for having one player. So there will be probably half a dozen consumer next generation banks and maybe half a dozen SME next generation banks, and some
Sure. Thank you, Bala. I am very mindful of the time, and we are having pretty much we're getting closer to the end of our session. So I'm going to ask each panelist 30 seconds of any final words that you have on the topic, or anything that you would like to say to the audience as a conclusion for our event today. So let's start with Varun.
Thank you. First of all, thank you for being here. Just one message: go all out in the fintech space, because the machine is just getting started. Believe in what you want to do, and either you're an employee, or you're an entrepreneur, or you're a vendor, or a participant. I think there's a business model, and there's a value to create, and there's customers to give smiles to. But I think what is most important is to go all out, because when you don't go all out and question the way things are, you are not optimizing, and eventually you don't know why you failed. But I think true success will come when you're really able to go all out to India and say, I want 100 million consumers, or I want 500 million consumers. So I think keep the vision very high, and continue to work on it. The next 10 years are going to be a lot of fun.
Absolutely. Thank you, Varun. How about you, Sahil?
Yeah, so I think I echo a lot of sentiments which Varun shared, but I think one thing I would add is be close to your customers. And in my context, the customer is my merchant. And if you hear to them, and if you build products which are helpful to them, you will most likely sort of be building a win-win proposition, right? So and therefore the voice of the customer at least is something. And maybe it comes from a bit of my consumer background, but voice of the customer is something which is incredibly critical, even in our business. This is a business of trust. You're handling people's money. So if you're not like sort of listening to them, it's very difficult from there on.
Thank you. How about you, Nithya?
Yeah, I mean, as well said, I really think it's super important to, especially in a market like India, where things are changing so fast, technology is changing, infrastructure is changing, and therefore always an opportunity to keep on just pushing the envelope. When so many things changes, it's actually sometimes very hard to make decisions, right? What do you do now, right? And which is where if you're very close to your customer and truly distill down the insights into first principles, right? I think it really helps. In our case, our customers are both merchants and consumers because merchants enable this for their consumers and then their consumers use it. And our first principle around how we think about what we do in this otherwise changing market is we don't think merchants will always want to build relationships of trust with their consumers. We think of that as a first principle and always build features and use technology to keep on doing that. And on the consumer side, one thing we say at Simpl is that the best payment experience is no experience. No one ever came to any store, online or offline, saying, I want to make a payment. And therefore, the more, it's one of those products that the lack of the experience is where the value is. And to us, those are the two first principles on which we build everything else, using the technology that is rapidly evolving.
Thank you. How about you, Manish?
Sorry, I was on mute. Thanks a lot for having me here and listening to me and to all of us. I would say that, there are a lot of opportunities in India. Of course, fintech or finance being the biggest because we have so many people who are still living below poverty line. We still have maybe like 40 odd banks serving to so many people. And a lot of times you might feel that the problem is not clear, which always be there will be there. Even if 5 years, 10 years down the line, there will still be problems which will not clear. You don't know what's going to come next. I think what is important is to just dive into it. Do take the problems, whatever is coming heads on, whenever it is coming. I generally, as such, say shit happens, shit always happens. It's basically that how we are going to come out of it is what makes a difference. To all the young people out here, I would definitely say we all in India, we need you. We are still just at the cusp of what India can and do there. And we need all the young bloods, old bloods for experience, young bloods for their energy to come and do something different for India. So definitely say follow your dreams, dream bigger, and just go on.
Thank you. That's very inspiring. How about you, Bala? You're muted.
Bala, you're mute.
First of all, Bobby, thanks very much for an awesome panel. I think it's like probably one of the best, most engaging panels. I can't believe it's been an hour and a half engaging panel I've been in a while. And thanks for the other panelists as well. You made it pretty interesting. Secondly, my biggest advice would be that there are lots of opportunities and obviously a lot of areas of innovation. It's a big area, you'll make money, but don't focus on tomorrow, right? Like, to quote the cliche, so you need to skate to where the puck is going, not to where it was before. Let me give you one simple example of what I mean. One of the questions here is, hey, what about the 300 million feature phones, right? The not smartphones. Why don't we solve for them? And for that person who asked the question, that'll be a good example of a problem not to solve, right? Don't worry about the 300 million phones. Everybody will get maybe a cheaper smartphone, right? And the same question people asked me like 5 years ago, and I gave the same answer. It's like, I'm not going to solve for it, right? So that's what we call an ice cube in the sun problem, right? An ice cube in the sun, it'll melt sooner or later. So that's like a yesterday's problem. So you need to solve for like tomorrow's problem, right? If you're telling me about how you're going to give credit on Instagram, that's very interesting, right? Because that's kind of where the thing is. I'm using Instagram as an example, but obviously you know what I'm talking about, which is sort of where the world is going. So that's number one. And lastly, I think I just want to echo what Manish and others have said, which is, do get advice. I think, all of us in these entrepreneurs, everybody is generous with their time. In terms of if you just go and ask somebody, hey, can I talk to you for 15 minutes? People are generally okay with giving you time. And there's no point reinventing the wheel yourself. It's easy to talk to somebody and, bounce off ideas. And of course, you have to come up with your own new ideas, but it's a good place to start. That's what I say. Thank you.
Thank you, Bala. My final words, never stop learning. I think learning is a life journey. You learn until the day you, I guess, you go to the heaven. So that's why, and plus nowadays with the technology, there's so many different options and channel to get knowledge, right? And in general, a lot of knowledge are free. So once you have knowledge, you can turn knowledge into skill set. And for sure, when you have skill set, you will turn something valuable. And thank you for having me. And thank you so much for all the, to all the panelists for joining this amazing panel that I have recently. So, and back to you, Amit. And thank you for having us again.
Thank you. A huge thank you to all our panelists for joining us today and for sharing their experiences and their learnings with our audience. And I now request the audience to take a moment to complete the poll to provide feedback on today's session and share your ideas for the future ones. Your feedback is extremely important for us to bring more and more such sessions to you. And details on joining the Interchange platform for deeper discussions will soon be on your screens and will also be a part of the email that you will receive after this session. I encourage you all to join and engage with the like-minded community. Look out for details on upcoming sessions and do not forget to join our Interchange community for continuing the conversation and dialogues spinning out of from today's session. And also do not forget to join us for the Singapore FinTech Festival from December 7th to December 11th, 2020. Do visit our website on www.fintechfestival.sg for more details. And I would like to show you a quick video of Singapore FinTech Festival that is coming on 7th of December till 11th of December. And with that, I would like to once again thank you all for joining us, and we hope you found this session very useful. And we look forward to seeing you on Interchange after this session and having you at future sessions. Do not forget to submit your poll. That is, thank you from me. Have a good day ahead.
Thank you, Boy.
Thank you, gentlemen.
Thank you, everyone. Thank you, everyone. Have a good day.
Yeah.